Results for Twitter. Is it all over?
Yeah, that's right. The microblogging site lost $645 million in 2013. Now, much of that loss, $511 million, in fact, of it, happened during the last 3 months of last year, which was after Twitter floated on the stock exchange in November. There was some good news in the results, though. Revenue at the firm did double during 2013. But what's worried investors the most is that the number of new users that Twitter is adding every month is falling, just increasing by 4%, less than 4% in fact, by the end of last year. Now, Twitter had 241 million active users at the end of last year, but compare that to the market leader Facebook, which had over 1.2 billion users. At the same time, Facebook earned €1.5 billion in profits, while Twitter, of course, posting that loss. Now, compare their share prices, though, yesterday. This, of course, after Facebook's results have been digested by the markets. Their shares trading at over $62. Before Twitter's results came out, their shares trading at $65. Now, shares in after-hours trading plunged by more than 10%, leading to claims that the stock value was overvalued.
Now that we have their first quarterly report as a public company, we think that people are going to dig into those a little bit more and start asking questions about whether Twitter has deserved the level of valuation that they've garnered over the last couple of months.
Let's check in on what's happening on the rest of the markets now. And after some mixed economic data from America on Wednesday, the Wall Street fell back into the red at the close. Official surveys showing that the services sector grew in January, while private sector hiring also picked up. The S&P 500 had a particularly volatile session, closing down 0.2%. In spite of that, though, things looking a bit brighter in Asia today. Despite a rise in the value of the yen, the Nikkei is up over 0.5% in Japan. Mainland Chinese shares still closed because of the Chinese New Year holiday, but the Hang Seng, you can see, up 0.5% there. Over in Australia, the S&P ASX 200 up over 1%. This after the country posted a surprise trade surplus in December. Investors had been expecting a deficit, so good news in Australia.
Next up, Stephen, Google reaching a settlement with EU regulators to avoid billions of euros worth of fines.
Yeah, this bringing to an end a 3-year investigation by EU authorities against Google. The search engine says it will make significant changes to the search results it displays now for European users. It brings to an end a 3-year investigation by the EU's antitrust watchdog into how Google favours its own products in search results. Now, the agreement will spare Google potential fines of up to €5 billion. The EU says that it secured far-reaching concessions from the internet giant.
In practice, this means that when Google promotes one of its own specialized search services, there will be 3 rival services also displayed prominently on the page in a way that is clearly visible to users.
Next to the United Kingdom, Stephen, it's been a big issue there over the last year or so, and lawmakers are now taking action against these controversial payday loans companies.
Yeah, these are small companies that lend small sums of money, sometimes just around €1,000, but at exorbitant rates to people who often can't get finance elsewhere. They're part of a larger shadow banking sector and have become a major concern for financial regulators around the world. In the US, for example, 1/5 of households have secured finance from a payday loan company at some stage. The UK government is stepping in with new legislation, but other bodies like universities in the UK are also acting to try to protect their students from these exorbitant rates. Kyle Brown has the story.
Now.
On TV, online, and in the street.
You're good to go.
The message is clear. You're just a step away from fast money. At loan agencies like Wonga and The Money Shop, the average person can walk in and obtain a loan of €1,000 or so in just a few minutes.
It is a good one because I need the money now, so you can do it here instead of waiting 2-3 days at the bank, so it's quite good.
With hidden cameras, we hear the sales pitch.
When you pay us back, you can take that limit again. You can come and take whenever. You can extend it for another month if you can't pay us back in the next payday.
With interest rates of up to 50%, a €1,000 loan becomes a €1,500 debt in a few weeks. Spreading out repayments over a year can result in interest rates reaching 4,000 or 5,000%.
Eventually you find yourself with a debt that you're not able to pay.
And is that what happened with you then?
It happened with me, yeah, it did.
And was it very difficult?
Oh, very, very difficult, very difficult. And some of them I'm still struggling with.
Easy access to fast loans has tempted cash-strapped students. But this university is off limits for companies like Payday.
So we challenged that, becoming the first university in the UK to ban payday loans from campus. So we won't accept them here, any advertising from them, any stalls on campus, saying that charging 4,000% loans, that's just not acceptable for our students, and we're not going to make it easier for them.
Following an investigation of the short-term loan sector last year, a new government bill is being prepared that would force credit providers to consider customers' ability to pay.
Finally, Stephen, record results at Disney.
Yeah, the company earned $1.84 billion in the 3 months to the end of December, up a third on the same period in 2012. Now, it's partly down to the success of its Disney Infinity game, but also at the box office to success, particularly from the animated film Frozen, which took in $865 million at the box office around the world. That surpassed even The Lion King as Disney's highest grossing animated film. Happy turnaround for Disney. Last summer, they were saying they were going to lose $190 million on The Lone Ranger. So a winter warmer for them.
Not bad. Stephen Carroll, that's it for the business. Thanks for joining us. Time next.